Rates are bouncing up and down. Builders are pretending they're slammed and busy, even though the numbers say otherwise. Buyer demand is at an all-time low, even though they can technically afford it. They just don't trust what is happening right now, and rightfully so. And now we've got a trade war on top of it. And depending on who you ask, this is either this is how we get inflation under control, or this is going to make everything worse, including housing. So I just want to make it clear, in this video, I am not here to predict anything. I'm definitely not here to tell you if this is a good time to buy or sell. I am just walking you through what's actually happening, what people are saying about the housing market when it comes to tariffs, and what you can maybe expect going forward in the spring market, especially here in the Houston area. So if you haven't been paying attention, as of last Friday, April 11th, interest rates went back up over 7.1%. And no, it wasn't the feds who did it. This was the bond market reacting in total chaos. What had happened was there was a major sell-off in the treasuries, which pushed the 10-year yield higher and took mortgage rates with it. We hadn't seen a 7.1 interest rate in a while, and then we were back to it very quickly. But now, as of Monday and the day I'm recording this video, Trump has taken back some of the tariffs that initially caused the yield to rise on Friday, at least temporarily, and that gave the bond market a little bit of relief, but not a ton. Yields did come down slightly today, and now the interest rates are in the very high six, somewhere around 6.85 to 6.95, depending on the lender, which is still higher than we were just a couple of weeks ago. Now, here is where it gets tricky and a little bit political. One camp, mostly on the right, is saying that tariffs will help bring inflation down long term and eventually give the Fed room to cut rates. Thinking is essentially, if we produce more at home and stop relying on other countries, eventually it will become more affordable here. And that stability will give the feds more ease to let up a little bit on the interest rates. The other side of the camp is mostly left-leaning economists or nonpartisan parties like the Fed itself, is saying the total opposite. That tariffs actually raise the cost of goods, which will essentially raise the cost of housing and new construction, which will eventually be passed on to the buyer, which essentially drives inflation up, not down. And if the inflation continues to stay sticky like this, the Fed has no room to cut rates. So in other words, if you're thinking of buying or selling in Houston this month, you kind of have to pay really close attention to the interest rates, and not just once, but constantly, because they are changing. You know, a half percentage rate can make a huge difference in affordability for you on what you can afford. And they're not moving right now because of the feds. They're moving right now because the bond market is reacting to chaos. And I'm not even saying that dramatically. It's literally reacting to every single headline about tariffs, trades, jobs, the market, anything, it's reacting. None of us, not the Fed, not the lenders, not even the economists, know where interest rates are going to land this spring or even for the rest of the year. And then there's new construction, and in a builder-heavy housing market like Houston, this definitely adds a whole nother layer to this tariff thing. So will the tariffs affect new construction homes here in Houston? Yes, absolutely. The National Association of Home Builders have already came out and said, depending on the region and the type of home, this will add about $7,000 to $22,000 onto a new construction home price with this round of tariffs. And builders are not exactly just importing a few doorknobs here and there. And depending on which report you look at, about 7 to 10% of the materials that are going into that house are imported, with 1/3 of the imports being from China. So if the tariffs do stick or get worse, this will raise the cost for the builders, period. And no surprise here, builders are not just going to eat that cost. Then what's going to happen? When margins get tighter, typically one of two things is going to happen. Number one is they're going to start offering fewer incentives, or they're going to start giving you less house. So for instance, it might be same price, fewer upgrades, smaller square footage, or the base price stays put, but they pull back on some of the incentives, maybe less closing cash, maybe no more fixed rates, or it could be a mix of both. Another thing I want to just put out there is that we have been hearing some rumors that builders are bringing back escalation clauses, meaning that they're putting in their contract, if the home price raises mid-construction, they have the right to raise the price they're charging you for that home, and you have to come up with the difference. So that's definitely not fun. So if you are looking for new construction, definitely make sure that's not hidden in the contract. And again, depending on who you listen to or which political way you swing, there's a different version on what this means long-term for housing affordability and new construction in the Houston area or anywhere where there's heavy new construction. People on the right will say this is short-term pain we need in order to bring manufacturing back to our country, and then that will stabilize the chains and maybe later down the road make it even more affordable to build homes here in the US. Folks on the left and nonpartisan groups like the Fed are saying that this is just going to drive the prices up even more in the middle of a housing affordability crisis, and all these price increases are just going to be put onto the buyer. So is this a good time to buy new construction? Overall, right now, new construction numbers are hurting. I always laugh a little because if you talk to any builder rep right now, doesn't matter what builder you walk into, they're going to say that they're slammed, they're busy, they're moving inventory like crazy, writing contracts left and right, and then as soon as you leave, within 5 minutes they're texting you, so do you think your buyer's going to put in an offer? We're open to any offers. And you can hear and sense the desperation that they are not reaching the same numbers that they did at one point. They'll say business is booming, but they will give you $20,000, $30,000 incentives if you have a pre-approval and a pulse right now. As far as the builder CEOs, they're definitely not sharing the same level of optimism as the sales reps. A lot of them are scaling back, they're delaying new phases and projects, and their confidence has gone to an all-time low. And I'm not going to tell you buy now because that's not the point of this video, but I will tell you if you were planning to buy new construction this year, now might be the time to pay attention because currently builders still are offering incentives and they're definitely still negotiating. I don't have a crystal ball, but if tariffs continue and the cost becomes an issue, that's not something they may be able to do within 6 months. So I don't know. I'm not going to tell you what to do, but I'm just telling you kind of what's happening right now. Literally, if you're trying to time the market perfectly, it's always a gamble. Buy when you're ready and when you can afford it and you want to buy, not when some person on YouTube is telling you it's a good time to buy. So if the numbers work for you with your job, your payment, your lifestyle, your goals right now, then great. This is a great opportunity for new construction. If not, keep waiting. Just go with eyes wide open. Don't let the builder confidence stray you or let you make a bad decision. They're hurting. They're willing to negotiate right now. Another problem with the tariffs, not directly, but is going to indirectly continue affecting our abundance of inventory. Normally in this kind of spring market where we have an abundance of inventory and slightly lower rates than we did in winter, at least before this past week, you would think that there would be a lot more buyer action. Buyers would be out shopping, sellers would get more serious, and things would get unstuck. This year, that's not what's happening, and I feel like with all the uncertainty in the economy now, it's going to get even worse. Inventory is up almost to 5 months. This time last year, we only had about 3 months worth of inventory, so we have gone nearly 50% more inventory than we did last year. So we're seeing a ton more homes, but not a whole lot of action or movement from both buyers and sellers. Politically, again, there's two different takes on it. One side says this is good. This is how a natural correction will happen over time. Sellers will eventually lower their prices. The other side says it doesn't matter how much inventory we have. If buyers can't afford it and tariffs are only going to make it worse, we're only sinking ourselves deeper into a hole that we're not going to be able to get out of. And for me, both can be right in this instance. The truth, both of them are right. The market should be heating up. Sellers should be lowering prices based on how much inventory we're getting, but neither are really doing that because everybody's kind of stuck in this holding space. So if you're wondering, is this hitting Houston or Texas harder than it is other parts of the country? Short answer is kind of, yeah. Texas builds more new construction homes than any other state in the country. We've got land, we've got builders, and up until recently, we kind of had a steady demand. We rely more than any other state on imported material, especially when it comes to the housing market. So when tariffs go up, our build costs go up faster. The ripple effect is going to affect new construction, existing homes, and buyers' monthly budgets. And it's not just housing when it comes to Texas, especially Houston. Because of the bigger industries we have here that keep things moving that are a little shaky right now. For one, oil and gas, we are an energy economy here in Houston. With global tensions, oil prices are kind of jumping all over the place at the moment. Uncertainty is slowing down hiring and future projects, And when those slow down, the housing market is naturally going to slow down here in Houston. This means that there's going to be fewer relocations, less pressure on the housing market, and in some case, layoffs and migration. A few years ago, Texas was the move-up state. We were the place everyone is going to, and now we are no longer on that list, and some people are even trying to get out of here now because of our costs. So while the housing market is still active here, we are not completely insulated like we once were. In fact, we're one of the few markets when things start to shift, we're going to feel it first because we have so many industries here. We have so much new construction, all the things that affect the housing market we have here first. Of course, everything's political. The right side when it comes to Texas economy is saying that Texas is better positioned because we have a supply of jobs and more flexibility than most states. And this shakiness we're feeling is short term, that we've been through worse. Left-leaning economists will say affordability has already slipped out of reach for many Texans. Tariffs and inflation are just going to make that gap wider. And if the job growth slows down here, the housing market is going to slow down much faster than people are going to anticipate. If you're buying or selling right now, you need to pay attention to more than just the rates and pricing. Look at the bigger picture, because what happens in oil, tech, and stocks is going to go downstream to the housing market, especially here in Texas. There's a lot of noise out there right now when it comes to tariffs and builders and new construction and the economy. I mean, there's a lot of noise and it can get a little overwhelming. If you like this video, please like and subscribe, as it helps the algorithm know that this is good information. As always, thank you so much for watching, and I will see you next time.